All right, hey there, good morning, everybody. Christopher Inks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on a somewhat rainy and overcast morning here in San Antonio, Texas on, September 10th, 2020. It's a Thursday here. Almost the end of the week, guys. We've almost made it. And it's amazing what a few days can do for the markets. You know, again, you had the strong sell-off last week into the beginning of this week. And there's been a little bit of a retracement since then, and nothing really significant, but oh my gosh, all of a sudden the market is very bullish again, the market participants. So, this kind of thing usually happens, around tops, and so we'll see if it continues to play out as expected. Worst case scenario is it continues to push up more, and then we just have to figure out where this fifth wave ends. I mean, too many times people, they get in there and I guess what I'm trying to say is you can always tell how new somebody is to trading, and whether they've been doing it, months or years or not, you can still be a new trader. And what you'll find is they expect things to happen yesterday, basically. If you say something, if you're watching for something to happen, and it doesn't happen immediately, they come out of the woodwork and they start, oh, look, you're so stupid, you're so wrong. Yeah, if you come off like that, guys, that's a real big clue that you really aren't a trader. You don't know what you're talking about because you haven't been in the market enough. You haven't been humbled enough to understand that tops and bottoms are processes. They aren't events. And, you kind of, unfortunately, you confound the two. What you expect as the top is what you're just looking for an event. And of course that leads to why, most traders end up losing money in the market because they're chasing those events. They think they have to sell at the highest or short at the absolute highest price and then buy, down there at the absolute lowest price. And that's just not the way it is, guys. If you're chasing the absolute highest and lowest prices, the events, the odds are very, very, very much stacked against you. If you understand something I've been really trying to continue to get across to our members in Discord is this idea that successful trading comes from processes. If you want to be a successful trader, concentrate on the process. And that's different from what most new traders think, because most new traders come in and they look at the goal, at the result. They're saying, man, I need to buy that lowest price or I need to sell that highest price. That's all they're interested in is the price. And so because of that, they don't actually have a process. And so they just kind of haphazardly do this and that and whatnot, and nothing makes any sense in the grand scheme of things. It may seem to them like it's making sense, but the reality of it is it doesn't. And that's why they end up losing money. You develop a system, a process that you can repeat over and over and over mechanically. You get in, you profit, you exit. Repeat. Rinse and repeat. That's all you're doing. If you can lock in, even if it's just a small bit of profit, if you can lock it in consistently, guys, you will get a heck of a lot further than you'll ever get trying to chase those events, those highs, those very highest and very lowest prices. So if you came in here thinking otherwise, I hope you're listening right now, because the goal here is to share information that you need to be a successful trader over time, guys. I don't care if you've had a year of good trading in a bull market. I couldn't care less, guys. I don't care if you've had 10 years in the stock market, that secular bull market doing well. You're not a trader, guys. You're lucky. Everybody's brilliant. Everybody is a wizard in a bull market. It's hard to lose money. Now, it can be done, but it's hard to lose money in a bull market. Can you identify when a bull market may be ending? That's the question. And can you trade effectively? That's the question. Now, that doesn't mean as you're looking for a top to form that you just sit back and you don't do anything. You can easily continue to ride the trend up until a confirmation, comes about, guys. But you have to remember that tops and bottoms are process. They're ranges. It's a process to distribute at the top. It's a process to accumulate at the bottom. All right? If you think markets go up 10 years without any significant pullbacks, or you think this quick little pullback takes care of what's happened over the last 10 years, you haven't been in the market long enough. You really haven't. You haven't been through enough cycles. I think best case scenario, the pullback from March is right before the end. Again, we're finishing out that fifth wave at that point. You have the sharp correction off there. It's kind of a warning shot. Lets the market know, hey, listen, better be paying attention. But what does it do? At the end of 10 years, it just kind of gets everybody emboldened out there. Everybody wants to buy. You see you see all these call options going out on Tesla and Apple now. More than before. It's ridiculous. But, markets don't go up forever, guys. Contrary to what Davey Day Trader wants you to believe. Stocks don't always go up. So anyway, good to see y'all here. Who's here already? We've got Greg. What's up, buddy? I see Data's checking in here. Universo is here. Good to see you. Logic is here. I love that. Logic, man. I'm all about logic. That's what it's all about. I don't like emotion. Emotion drives me nuts. Hey, what's going on, Sean? Spiral Architect. LG, what's up? He says, been absolutely crushing my scalp trades lately. Your teaching has played a huge part in that. Man, glad to hear it. Really excited to hear that. Because at the end of the day, guys, it's just about me trying to impart knowledge that I've gained over a quarter of a century of doing this. Whether you choose to listen in or you choose to apply it, or to even apply it properly, or to let go of, a different way of thinking that you may have come with, that's all up to you guys. But these things that I share, especially there in Discord, guys, if you're tier 3, man, yesterday, man, we had our weekly live education stream there, another hour of training there. And man, just absolutely amazing feedback in what I got. People tell me, man, I did not know you could use the MACD like that to find entry signals for trades. Absolutely blown away. People, I've got messages last night and this morning already from so many of our members already putting it to use and finding entries already in otherwise confusing areas for them. And the great part about what we teach there is that it doesn't take any prior, trading knowledge or market knowledge. These are techniques that you can use right away. If today is the first day you ever opened a chart, you could literally put these techniques to use and start making money. And so it's been a big thing. I think it's really great. I think we found a good niche in the way that we're doing that tier 3 weekly educational stuff. So exciting times. I'm sorry, I'm all excited, man. I love to hear when people get through and they go, oh my God, you see that? Even when you read it, you can see a light bulb going off in their head. And that's just awesome. That's awesome. So, hey there, Brian. Good to see you. Casper checking in. Alonzo, what's up? KRN is here. Who else is here? Skateboard, what's up, man? I haven't seen you check in a while. Good to see you. Gerben, what's up? He says, saw this tweet from the guy who thought of the S2F model. So I guess you mean Plan B, right? They said central banks can print all they want to get their desired 2% inflation, but they will not succeed because technology is deflationary. I've seen that before. I've seen that argument before. Drives prices down. Demographic trend of aging population. Older people spend less. Yeah. And exactly, same things I've been talking about as well. A lot of the money that's held today are held by what you guys would refer to as baby boomers. And they ain't spending, crazily out there. And if they've got a feeling that the market's hurting, I mean, you got to think, guys, these guys they don't want to have to work if they don't have to. They've worked for, most of their lives already. So they're not going to make a lot of unnecessary purchases and whatnot. So, just other ways of looking at information to kind of come to a result. I made a tweet here just a little bit ago because I see over the years here on crypto Twitter especially, I see a lot of nonsense about education. I see, about higher education. People like, college is a waste and all this. Guys, listen, if you're going to college to learn a hard job skill, like how to do a specific function in a job, I think you're doing it wrong. College should be about learning how to research, how to think, how to speak effectively. It's about networking. I mean, at the end of the day, that's a huge thing. Networking's a huge thing, guys. But it's these soft skills, these things that you can use in life and that are transferable not only from job to job, but from position to position. If you are in a job and you expect to move up in your job to, from basically a worker bee position to a manager to a higher, guys, you have to have these skills. You will not do it without these skills. That's why you should be going to college. And for that reason, higher education is a big thing. But again, most people, approach college because they don't know how to approach it any other way. They approach it as this, I've got to learn how to do a job skill so I can get a job. Man, you can get a job any other way, guys, especially today. You can learn your job skills online, especially if it's technology related. You can get certifications and online training and whatever, how to do programming or, systems maintenance or IT or even customer service stuff or whatever. But if you don't have those soft skills, that's all you're going to be is a cog in a machine. And maybe you're okay with that, but a lot of people aren't. So don't buy the nonsense that higher education is worthless. I've spent a lot of money in it, I can tell you right now. And none of the money I've spent has actually been there to get a job. It's always been to learn how to think, how to speak, how to research effectively. These things that sadly, most people just really don't have in enough depth. And so then you get online and you see everybody just, spouting off this nonsense, sharing stupid memes that really don't make any sense, but they think it does. Sadly, if you get a big enough group of people believing something erroneous, the question is, does it become truth? Well, it's not really truth, but if they believe it to be true, a big enough group of people, it can act as truth until it can't anymore. But it's all about lying to yourself and whatnot, even if you don't understand that you're doing it. So it is what it is, guys. Let me see here. Let's see here. Deflation also means negative interest rates, and that will drive investors to gold. I'm confused about that. Deflation. I mean, there's a couple ways to get to it. Deflation can come about through production, overproduction, whatnot. It can come about through, financial, like we're kind of looking at it now. But if you've got, let me see here. Negative interest rates, that shouldn't drive investors. Let me see here. Interest in Bitcoin skyrocket. Brace yourselves for when the U.S. goes sub-zero. Okay. So what we're looking at here, let me see if I can try and say this in a way that makes sense. If we are at a grand supercycle top and we're changing out of that, then what that means is the usual interplay between interest rates and deflation and inflation and gold and all these other things is not going to be it's not going to have the same as what it did previously. Because a grand supercycle top is like basically, it's 80 or 100 years worth of upward progress that needs to be cleaned, that needs to be cleansed, I guess is what to say. So these normal results that you usually expect that happen on the way up don't happen the same way. Because it's part of a bigger issue. In this case, it's the whole idea of the credit bubble. Prior to, in 2008, it was the banks, it was the mortgage. 2001, it was .com. Now it's basically the everything bubble. It's the credit bubble. And so I don't think that we can necessarily expect that things will work, at least not in the beginning, the way that we normally kind of assume that things work. And I think that's a lot of the issue that they're having there with the Fed right now. trying to figure out how do you spur inflation. We thought it was going to we thought it was going to jump up there with these historically low unemployment rates, but we got nothing. We got nothing. That's kind of their situation at the moment there. So yeah. Let me see here. How does unemployment and the upcoming crisis influence stocks and Bitcoin? Right now, it doesn't. Right now, the markets have disconnected from everything else. So they don't really. Now, how should they eventually overall kind of affect it? Well, unemployment means less money out there to be spent. Unemployment means the government stepping up to influence more control and power over people's lives. They don't just give you money for nothing, guys. They're going to expect something in return. But nonetheless, it's more the government involvement. It's crowding out of private finance and crowding in of public finance. And so that materially affects the markets in the way it kind of works out. But, everything else aside, if you've got higher unemployment, you necessarily have less money, going out there and being spent frivolously. And if you have less money being spent frivolously, then you can expect that generally over time, the stock market and other risk-on assets will get less and less interest. Less and less money will go to them because the money isn't there to go to them. People are worried about how do they pay their rent? How do they pay their food? How do they keep their kids clothed and fed and going to the doctors? How do they keep their cell phone and their internet? How do they keep their 3 cars? First world problems, man. But seriously, that's kind of where it gets to, and it doesn't happen overnight. It takes time. When you have an economy doing like we did, where we were sitting at the lowest unemployment rate that we've had in 50 or 60 years, and we had it there for 2 years. It takes a while to flush things out and to get things kind of, again, tops or processes. So it takes a while to kind of get to that point where the realization comes in that you can't just keep trying to push the market up. Now, how does it affect Bitcoin? Again, guys. At the end of the day, Bitcoin is most likely a risk-on asset at the end of the day. Basically, what that means is people don't put money in Bitcoin when they're worried. Most people. Now, maybe you do. But most people in general, just like the stock market, they're going to put money in the stock market if they're worried. If they're worried about the economy, if they're worried about how do they pay their bills and keep the food and keep the lights on, keep the house rented, all these things. I saw something here recently where even New York City, the number of open apartments, I think, is something like 15 or 16,000 now versus 5,600 this time last year. Now, part of that is people moving out to the suburbs, flown away from the city. I don't know. Is that going to be something that sticks out? I don't think so. Everything happens in cycles. I think people will be back. But, a lot of that is also the fact that, all this protection, you don't pay your rent, oh, that's okay, they can't kick you out kind of thing. It comes to an end and everything. So, generally, if people are worried about their bills and their situation, they're not just going to put money in. You can make all the arguments you want about how Bitcoin's going to be where it is, wherever it's going to be in 5 or 10 years. They're worried about tomorrow. 5 years out doesn't matter if they can't, pay this month's rent. If they can't put food on the table for their kid. That 5 year, that 10 year thought, that's all. I think that's extra money when things aren't so worrisome. So I think that's kind of the best way to look at that. At the moment. Baker, what's up, man? He says, love that live training yesterday, already using it. Yeah, man, getting so many people send those messages already. It's been really great, guys. I'm glad we're doing this. I think it's been a great thing for Tier 3 for sure. Hey there, Patrick. Good to see you. Mustafa, what's going on? Yo. Digital Mining Solutions, good to see you. Let me see here. Devin. He says, the greatest obstacle to discovery is not ignorance, but the illusion of knowledge. Exactly. The problem with knowledge, guys, is many times when you get it, it's hard to imagine that other people can't see it. And so one of the biggest things that people have to come against as they gain knowledge in life, whether it's financial markets or anything else, is just that the more you learn, the more you tend to isolate. I found that, not just with myself, but also with other people I know who have an extensive educational background. It's because you can't, it's hard to relate to everybody else. When you see the world for what it is, a bunch of gray rather than black and white. The more you learn, the less clear everything is, guys. The more possibilities that present themselves, the more, decision branches come out. And it's difficult for a lot of people to deal with. It's hard to see that. And then you try to make a point and somebody comes at you with a very black and white look at something. And you go, man, you're just, you're here. You're nowhere near up here. So you can't even possibly see all this. So no matter what I'm trying to do to explain it, you're still down here. You can't grasp that. And it's a difficult thing. What you'll find out, not saying myself, but a lot of very intelligent people historically tend to live very tortured lives. And many of them end up ending their lives prematurely because they can't effectively live life because everybody else around them sees everything so black and white rather than, all the other possibilities that are there. It's a tough thing for a lot of people. But just understand that, as you gain knowledge, you understand that you know less and less. That's probably one of the biggest pluses to education. Is the more you get, the more you learn, the more you understand that you don't know. And it's a very humbling experience. It really is. Hey there, Esteban, Black Tech, good to see you guys here. Ronnie, what's up, man? Let me see here. Yeah, Data talking about zombie companies there, for sure, yeah. You've got them, companies that shouldn't be out there being, supported here. With everything. It's crazy. It's crazy. Now, that doesn't mean things end tomorrow or even next week or even next month. But what it means is, again, the top is a process, and it takes time to work through everything that's already happened, and to get that reversal going. So, we just we play it level to level, guys. You look and you go, okay, well, I think this might be a top here, and this seems to align with everything. But if it doesn't, we step back a little bit further and we kind of look at it again and find new targets. Which is why I keep telling you guys, it's okay to play the trend, even if it's the opposite of what your big thing you're looking at is. Because until you actually get confirmation of a reversal, price is still going to go up. And, again, I hate that I always have to seem to repeat this, but I still get people that just don't think. And it's tough, man. It's tough. How much time, at one point, it's like I want to help them get beyond that point, but at some point I'm just like, what's the use? If you're that ignorant and that blind in the way you look at things, what good does it do with me wasting all my time trying to help you get beyond your blindness? It doesn't. So again, sometimes I'll give a little response, if not mute, or I don't even think I'm muting anybody. I think I just block. Don't even have to worry about it anymore. Let me see here. Hey there, Crypto Girl. Logic says I'm describing them. Good to know. Hey there, Lewis Winthorpe III. He says, why was inflation so difficult to obtain during low unemployment? If, like the UK, the average person has little to no savings already and plenty of debt, so trying to encourage people to spend or borrow more when they already have little savings sounds like heading into a different disaster. Yeah, exactly. This is something I talked about probably a few months ago. When we look at this as the end of the credit bubble, right? We look at this as the everything bubble. The idea being that people will take on excessive debt and spend beyond their means for a while. But at some point they get there and finally say, you know what? Nah, man, I'm done. That's too much. I'm already overextended way over here, and the economy's doing this, and I'm worried about it. Why would I keep going and borrowing more just to put myself in deeper debt? No. Because the thing is, psychologically, debt is a negative. Psychologically, it affects you negatively to hold debt. You always feel enslaved. You always feel beholden to that debt. And so it creates stress. And stress leads to emotions, negative emotions, which lead to bad decisions. See, it's not just in the markets, it's in life. But it's in the markets as well. That's why I tell you guys, detach every once in a while. Let your system cleanse out all that stress that you don't realize is building up in the back of your head. So that way you don't accidentally trade emotionally. But yeah, you hit it right on the thing there, You kind of get to this point where we're at now, and the government's like, listen, we want you to spend more. We want to spend more. And so what did they do? They do QE. What does that do? Well, basically what that did was it said, here, banks, here's some reserves. Now, they don't actually get it. They hold it, at the Fed. The reserves are held there. But it means that the banks now have a cushion so they can loan out more money. And why would they do that? Because the people who normally come in to get loans are not getting them. The people who are actually qualified to get loans, right? They've got potentially the income and the credit that says there may be a good loan risk. They're not coming in. So the Fed says, listen, banks, we want you to loan to other people who you wouldn't normally loan to. Loosen your credit standards. We'll give you this supply, this reserve here. And the banks go, no, thank you. They didn't. What happened was, even though all that was put out there, all this QE money was put out there in that form, the banks actually tightened their lending standards. So the banks tightened their lending standards, meaning you had to be even more qualified to actually get a loan. And at the same time, people were paying back their loans, and nobody was really coming to get loans. So you've got credit contraction coming. If you have credit contraction, you're not going to have inflation. And so that's where we kind of get to, where we're kind of sitting right now. And the Fed's like, okay, what can we do? We don't want to do negative interest rates, and we say we're not going to. But what's the idea with negative interest rates? The idea is, well, if you're saving, because everybody's saving. Now, they're paying off loans. They're putting whatever money they have in the bank. It may not be a lot, but whatever they have, they're having there. They're not spending more than they're making. They're trying to reduce their paycheck to paycheck living that they've been doing for so long as best as possible. And so again, that all leads to that credit contraction. And so what happens then? Well, the money doesn't circulate. There's no circulation. There's no velocity. Velocity continues to drop off. Banks are refusing to lend. People are refusing to go get loans. Those that have any extra money are basically using it to either pay off their loans or save it. So the Fed maybe gets to the point where they say, you know what? Well, we're going to do negative interest rates. So now it's going to cost you money to save your money. You're going to have to pay the bank to hold it. The goal from that, again, the Fed can't force you to spend your money. They're trying to encourage you to do so. Because their hope is that you get there and you go, well, God, man, I've got to pay for them to hold my money in there. That means I'm losing money. I'm not saving money. So I'm going to go spend it. That's what they're hoping. But what happens if that doesn't work? What does the Fed have left to do, really? Everybody's like, oh, the Fed can go buy up all this and UBI and all that. Well, you know what? They would have to actually change some laws to do these things that everybody suggests they could do. Now, I'm not saying they won't change the law, but I'm saying they actually have to change it first. So from where it sits right now, all these easy answers are not so easy. But then it comes down to, okay, so what? The government's giving you money. It still comes down to, are people spending that money? Or do you get that money and you're concerned about what's going on in the economy, so you don't spend it? You use it to create a cushion for yourself. If you're doing that, again, it doesn't work. It doesn't make anything happen. You have to go out there and overspend and produce, and you have to overextend on credit so that you keep pushing inflation so you can pay back current debt with cheaper dollars in the future. And progress can continue to build, but it's all artificial. You're forcing it beyond what society says it needs at the moment. And so if you're going to do that, it only works as long as it works. When it stops working for whatever reason, it's like pulling the plug out of it or hitting, popping it. And so I kind of think that's kind of the area that we're at right now, I think. So yeah. Hey there, Oscar. Good to see you. All right, so let's look at Bitcoin here, guys. You can see what I've got here. With Discord, I think with you guys maybe here, I've talked about the possibility that we've got, 3 down or 5 down. I don't think so. I think we're, right now anyway, this suggests we've potentially got a wave 4 flat here playing out. So wave 3 down here, then you've got an A, B, C as an A, B, C as a B. And then we've got this ending diagonal potentially printing here with C. Right now I've got it as A, B, C as a 1, and then a 2, A, B, C as a 3, maybe a 4 printing out here. And then we'll have an A, B, C as a 5. If we check here, remember we've got this gap that still hasn't quite been filled yet. CME has had a high of 10,565. The gap is filled at 10,620. So about $65 above that high still to fill in that gap. So 10,620 is about where that gap is. If we look at this here, that's pretty much the EQ here of this supply structure. And prior to that is this wave 4 of 3 swing high, that small bit of local supply right there. So I wouldn't be surprised to see this continue up in 3 more waves to kind of hit that 10,620 kind of area potentially. Now, it's possible with all this overlap and whatever that this is done here. I'm not sure off the top of my head what the count might be there. But, it's possible that could be the top. Again, nothing's really changed from what we've been looking at. We're looking at this red trading range right here. And we still are below the resistance on that trading range. Remember, I talked about if we break through that, we're looking at this swing high, then the pivot, and then up here around this EQ up here around 11,300. If it does. But, again, moving in sideways here between the pivot and the S1 and pushing up here, wouldn't be surprised to get rejected right around the pivot here and then come on down, at least try for the S1. But again, looking at this, that would potentially have this target down here of this box at around 9,040 to 9,130 kind of area as a wave 5. Now, is that the end or the beginning or whatever? Again, somebody did share a count that has basically a, if I remember this right, because I just glanced at it, as I mentioned yesterday, I think I did like a 1, 2, and then 3, 4, and then 5. I said, 3 here and 4. And so what they're looking at here then is an expanded flat here. So A, B, and then 1, 2, 3, 4, 5 for C. Down here toward this high volume node. But that would be 4. But here's the thing. If that's 4, you're not going that high up there for 5. You're going, I think maybe you're testing the swing high up here from June of 2019. You're getting around that area. 14,000 maybe on a 5 on that. If I actually measure it out here, and if I'm right, if it was a 1, 2 here, and you measure out wave 3, you give it to this point here, you get the pullback to the expected wave 5, the end of that wave there. Your 61.8 is 13,878. It's right there at this swing high. So that gives you 5 up if that's the case. And guys, if that's the case, then after that, if you're thinking this is painful, this little bit here, I mean, at that point, you would have 5 up here. And so you're at minimum looking for I'll move down here. Let me switch this around here real quick. Of 76, 77, potentially closer to 6,800 here at the 70.5. Would probably be my guess. If you're making it up there, I think you're going at least that far. And that's only if this is a 1 and then you have a 2 and you're going up. If this is some kind of C wave or something, finishing off some other correction, then you've got lower lows coming in here. So stop listening to everybody that says, oh, things are definitively this way or that. There's still a lot of possibilities. But as traders, that means there's a lot of opportunity to buy and sell along the way here. So, I mean, this is kind of, this is pretty much kind of where we're at here with this. And as long as we're below this 1 hour, 4 hour pivot here, your buy should be to the downside. If you can get above it impulsively, then you open up a case for maybe a move up higher, potentially up toward the R1 pivot. And that's just plain pivots. That's taking everything else off there and just if you were to play pivots. I don't think this is an ABC or a WXY or any way you want to look at that. Right now, I don't think that is. Right now, it seems, based on the price action and whatnot, that it's potentially just a 1, 2, 3, 4, and a 5. Now, if it's 1 up and done and this is 5 down, this is either an A or a 1, which means, if it gets down here, which means you'll have a 3 up for either a wave 2 or a wave B, and then you'll have at least 5 more down, which again takes you down there toward that 7,000 level, I think, to finish that off. But, even at that, it's just potentially just a wave 2. So don't get so caught up in my ideas that, price may drop down there below 3,000. That's still a long way off. Things still have to happen along the way. You have to invalidate these possible bullish cases. So it's not like you sit here and go, oh, it's definitely going down there now. You'd be a fool to argue something like that. There are no guarantees. You might be right, you might be wrong. But there are definitely bullish alternatives along the way. So, let me see here. Hey there, Alexander. I'm not going to be looking at anything else other than really Bitcoin today. It's a Thursday. I can look at QQQ tomorrow. Tomorrow's our all markets day. And so that's generally when we look at other things. Today is Bitcoin, maybe DXY. Shorter show here, almost over. But yeah, so, we'll definitely, I can definitely look at that tomorrow on that there. Let me see here. So this is kind of where we got here. If we look at the DXY, speaking of it, I think this may be the count we're at the moment here. Potentially. We've got a 1, 2, 3, 4, 5 here. ABC gets you a 2, right around the 50% retracement. By the way, this would be ABCs here, a leading diagonal with a 3, 3, 3, 3, 3 interior wave structure. So ABC, ABC, ABC kind of thing. So basically just that leading diagonal type idea going on there. I guess it would look kind of like, more or less kind of like this here, I guess. Oops. If it's correct. We definitely need advancement up through this swing high here to kind of put it on some firm footing. For now, we're bouncing above the H1, H4 pivot, which is generally a bullish thing. We're back above the descending channel EQ, which is generally a bullish thing, basically finding it as support here. Let me see. We actually dropped below there. So there is no hidden bullish divergence there. But if I wanted to pull it back here, there would be. That's a pretty long way to pull it, but if you need it, possibly hidden bullish divergence from this swing low prior to your wave 3 to this one over here. But for right now, we're looking for an advance above this swing high here, which is 93.66. Now, so there's no guarantees yet, but things that I look positively about this, if this is a 1 and a 2, 3 ends up here around 95.80, which gets it above the descending channel resistance, which is what we would normally expect. And then that would leave wave 4, if it just goes the normal 38.2 retracement, that retest this resistance as support. Again, what we would normally look at. We look for 3 to push out, 4 to pull back and check as resistance, and then 5 to push higher. And they get you a 5 up here around 96.50, 96.60 on that. Again, remember, I look at this and I say, if this count is correct, then the move above this wave 4 termination point of this triangle here would suggest that the bottom's in. Would kind of confirm that. But for me to really be comfortable, I want to see it get above this blue range here. So I really want to see price get above that 95.45 kind of area. The first step is above the EQ right here at 94.35. But then definitely want to see it above that 95.45 kind of area. Now, the idea that maybe this is a 1-2 kind of gels with what we're looking at on the Euro USD, which appears to be doing a wave 2 correction. The Aussie dollar against the buck, which appears to be doing a wave 2 as well. Great British Pound against the USD, I believe, is doing a wave 2 as well. So, it seems to kind of coincide with the rest of those. So I'm going to give it the benefit of the doubt for now as we're looking at that. And, again, if DXY is continuing to push up here, then we should expect Bitcoin to more or less come down. I mean, look at right here. Just this is the hourly chart here. We've had this drop. Where's the DXY? There we go. And just the hourly here, we're doing this, this rise. So it definitely has an effect on what's going on there. Drop, rise, drop. And then you've got rise, drop, rise. Just in the opposite there. So, I mean, it looks like, it's not, I guess what I'm trying to say is the DXY is not in any way bearish locally right now. It could continue further down here maybe. Maybe this is A down here, and this is B, and then we'll have a C down. In that case, I'd be looking for a bounce here at around 92.30 or so. I'd be looking for that. That gets you at the 70.5. So, we'll see what it does here, but if it gets above that swing high there, that's usually a, pretty good sign that, hey, we're headed up there for that wave 3 next. What's going on, Sylvia? Good to see you. Tommy S. checking in. Appreciate you guys. Thank you so much. They're saying, hey, give me a thumbs up. So, yeah, if you're on YouTube or something where you can do the thumbs up, man, I would appreciate it for what we're doing there. But, I mean, this is kind of where we're at, guys. Again, nothing really significant. Pretty much the same thing we've been looking at the last few days. The idea, basically, we're going to fill in this upper gap and then come down and fill in the lower gap. That aligns with a possible 5 count down. From there, is that a C wave, and then we've got this, next 5th wave up, or is this an A or a 1, and then we've got a B or a 2, and then we'll have a 3 or a C at least coming out of that? We'll find out what it is as this plays out. But locally right here, I think if we've got further upside, I think, we're probably just going to hit that 10.6, 10.630 kind of area. I could potentially up here to 10.7 to get the, the pivot, but I would probably hang more toward the lower end of that. But if you do move up impulsively through the pivot, don't worry about the count here. That would just suggest to me that maybe we've got this move up here toward, this supply structure up here potentially as high as the EQ at about 11.3. And that's just how I would play it, guys. If you continue up through that, through the supply structure here, the R1 pivot becomes your next target there. Until something becomes more clear about what's going on. So, yeah. Hank, what's going on, man? Good to see you. Gervin says they were in an interview with the European Central Bank about strong euro. Basically, they said they would not take any action for now, but negative effects are definitely there. Yeah, didn't the Euro Bank over there? They were meeting today to discuss that, right? Putting the brakes on the rise of the euro against the dollar. But, as we've already looked, the Eurozone, there's already is already looking deflationary. Their CPI was at a negative this last time. So, that's deflation right there, in the way the government calculates it. So, when people say, oh, the euro is so much stronger than the U.S., well, the dollar, right now, the Eurozone over there is negative CPI. U.S. hasn't hit that yet. So, if you're looking there and you need a reason why the dollar would rise, there's your reason. It doesn't get much simpler than that at the moment. Doesn't mean things can't change or whatnot, but remember, central bank responses, they're always responses. They're always reactionary, guys. The central banks aren't proactive, they're reactive, which means that things happen and then they act. So, again, a lot of people say, oh, well, the government's not going to allow this to happen and whatever. Well, the government's not necessarily keeping it from happening. If it's happening, it's already in the process. The government may try to do what it can to stave off what's going on, but they don't have a really good track record of doing so. If you instead of just continuing to to promote all the nonsense that goes out there, if you guys actually look at what has happened historically, look at what the central banks say they're going to do and what they do, and then look at the economy. And what you'll notice is most of the time, it doesn't. What they do isn't really affecting the economy, not in the way that people believe it does. They may attempt to take credit at times, but you can often find other things that have happened that have actually caused what the central bank may be trying to take credit for. Monetary policy alone, I don't believe that really has any effect on it. Now, if you can combine monetary policy with fiscal policy, so government actions and Fed actions, I think you've got more of a chance of maybe. Even then, I don't think it's necessarily a long-term thing. I think it's a short-term maybe influence on the market. But monetary policy alone, I've never been a firm believer as any kind of real driver of market action. It usually takes some bit of fiscal policy in action there as well that runs tandem with it. Because there's only so much, that your central banks can do, especially here in the U.S. And again, I am speaking really from the U.S., guys, because I don't know enough about the intricacies of the ECB or Australia Central Bank or anything like that to really talk in depth about it. But just in the way that central banks generally work and the things that we do know, that's not a whole lot different than the way the U.S. looks at it. Most Western countries approach problems the same way with that kind of thing. Excuse me. Hey there, Clarkman. Do you see a small jump in the stocks? I just see corrective action right now. I see no reason to get overly excited. Stocks appear to have completed basically a wave 1 down. It's corrective wave 2, 3 waves up. That's really kind of where I'm looking at it right now. Nothing, again, guys, this is something that I update a couple of times a day for our members. So it's something I'm looking at, every day. And I don't see any real strength and bullishness or anything coming out at the moment. Now that could change. But right now, it just appears to be corrective. So, LXT, what's up, man? He says the Great British Pound is dumping. Ooh, right on schedule. Again, DXY is popping. Euro, the cable, they should be dropping. Let me see here. Let me see. Yeah, so Clarkman, as far as stocks go, I think right now my thoughts are we're going to correct into today, maybe into tomorrow, and then resume the drop. Today or tomorrow, maybe worst case scenario, the beginning of next week. But again, for right now, I just think stocks are just reactionary right now, corrective. I don't see anything in any of anything really that's really bullish I mean, even looking beyond just the price action, looking at anything else, I don't see anything that's really bullish right now. Let me see here. Why no NDX update? Did you request it? Did you request it in the chart request channel? If you didn't, then I probably didn't see it. Remember, guys, if you're with us and you're a tier 3 member and you want to see a chart, remember, you got to actually ask it in the chart request channel. And then you go to the requested charts channel to see the chart that we put out for you. But if you try and request anywhere else, the odds are I probably won't see it. Even if you tag me, I might look at it real quick and then forget about it. I try to do all the chart updates, the chart requests at 1 or 2 times in the day. And that way I'm able to do it all together and I don't forget anything. So yeah. You put it a few minutes ago? Oh, well then I haven't done it because I've been here, fool. You know what's up. Everybody meet LXT. He'll hound you over in the channels. He's a great guy. He really is. Hank says he tends to agree with Scott. I'm not sure what. Billy. Okay, he says your friend Scott Melker is very bearish on the DXY. Tell him to wake up. Hey, Scott's his own man. Just like everybody else, guys. Just because you have an understanding of how the market's kind of working, whatever, doesn't mean you can't come to different results. It doesn't mean that you can't come to different, ideas. That's why I keep trying to tell you guys, don't worry so much about, what I'm looking at as far as price and everything goes. Try to pay more attention to my explanations of why I see it doing what I see it doing. And my explanations of how things actually work. And see how that's applied. You guys are going to get so much further trading if you pay attention to that rather than the result, rather than what I'm looking at. If I'm right or I'm wrong, it really is not a big deal, guys. With my trading system, the way that I trade, my risk management protects me if I'm wrong. And so it's not a big deal if I'm wrong. I made a post the other day because I continue to get some of these comments there on Twitter. And I made this post yesterday, I believe it was, that said, basically some of y'all out there care a lot more about whether I'm right or wrong than I even care. And that doesn't mean I don't care that I'm right or wrong, but it means it's not that big a deal. Risk management is there to protect me if I'm wrong. And, I know from 25 years of doing this that the system that I use is very effective. So you can sit here and you can argue and you can play these games, these little nonsense things all you want. But at the end of the day, I'm trading my money and I've been ridiculously successful doing so. So it doesn't matter what your arguments are or how butthurt you are about my position on something because you're emotional about your position, which doesn't have as much thought and clarity. That doesn't mean I'm going to be right, but it just means you have to recognize, guys, when you're out there and you're emotionally attached to a position. Because when you have emotions involved, it tends to blind logic. And you start ignoring things you should be paying attention to. And that's why I always warn you guys, if you're trading emotionally, then, you're likely to end up losing money. More times than not. A lot more times than not. So, yeah. I love disagreeing with a smart man more than agreeing with a fool. Hank says. So what's the case here? You disagree with me. I'm not saying I'm a smart man. Maybe I'm a fool. So you're disagreeing with a fool. Nah, again, guys, I just do what I do. I try to help you out and let you know what I've learned over 25 years of doing this, in the hopes that it helps you out, guys. I'm in no way here to convince you that I'm right, wrong, or otherwise. Every time I have an idea about, especially a larger idea of where price may be headed, whether it's a particular stock or an index or the market in general or an asset class or whatever, it's always predicated on the idea that it's not guaranteed. It could be wrong. And there are bullish potential alternatives along the way. Again, what we've talked about here with Bitcoin as an example. But again, most of the responses I get negative responses I get are very emotional, not very well thought out. And that's dangerous for the people doing that. Because, again, it just means that you're more likely to lose money than not. You're not thinking, you're not paying attention to things you need to pay attention to. You're just like, oh, how could it possibly go down? Stocks always go up or something like that. And you want to get out of that mindset, guys. Because, if you've been successful trading up since the March low, that's great. But it means nothing if you end up at the end of what has it been? April, May, June, July, August. At the end of 5 months, if you end up negative balance, what good did it do, right? Or you end up with, 3%. Why did you only come out 3% ahead on such a large advance? And if you're seeing that kind of thing, then you need to go back and look at that you were likely being emotional. And how do you change that then? It's not about me pointing it out to make fun of anybody or to make them feel bad or whatever. It's pointing it out so that way you recognize it. And by recognizing it, you can then take the steps that you need to take to change so that you become more effective with your trading. I have to assume, guys, that if you're out there trading, you want to make money. Again, guys, you can either be worried about being right or you can be worried about making money. If you're worried about being right, that takes precedence over making money. And that's the part that most people aren't catching. That's where they end up messing up. So yeah. Let me see here. Why do I do what though, Clarkman? Let me know. LXT says, sorry, I didn't actually request it in the request because I thought it's rather similar to S&P and not worth your time. Well, then why you ask about it if you don't think it's worth my time? No, man, I'm just kidding with you, man. Yeah, we're going to add NDX into the daily updates. I plan to get that probably there today. Sometimes it takes me a little bit to get the extra daily and intraday updates in there. By the way, guys, I think I'm going to divide in Discord. Everything is under one heading, daily intraday updates. I think I'm going to divide that into two groupings, daily updates and intraday updates. So when you come in as a 2 or a 3, level 2 or level 3 tier member, you'll know which ones are updated a couple of times a day, which ones are only updated once a day. And remember, the NDX we add in there, like the Dow Jones, like the USD CAD, are only going to be tier 3. All the rest of them are tier 2 and tier 3. But those specific ones and a few others we'll be adding soon here will be all just for tier 3 only members. Why do I teach people and be so charismatic? Oh, am I charismatic, really? I don't know about that. I teach people because, man, for me, guys, honestly, I hear a lot of people arguing that you have to be altruistic. And if you're not altruistic in life, then there's something bad about what you're doing. Guys, that's such nonsense. Again, I've got the philosophical higher education background. Philosophy is part of my background. So I've delved into the topics of altruism and whatnot. And you know what, guys? At the end of the day, I can say this. I don't necessarily believe there's any real altruism out there. I believe we all do things because it returns something to us. But I also think that's a perfectly fine thing. I don't think that it makes you a bad person. If it weren't for people wanting a recognition or wanting money or wanting, to leave their mark on the world, we wouldn't have things like the cotton gin, which turned to everything we have it now, or, indoor plumbing or air conditioning. God knows, Texas, man, you want that, that air conditioning. And these things are good. They help everybody in general. So I'm not altruistic. I don't do it for the sake of doing it. I do it because when I get these messages, like the messages I've been getting last night and today for what we taught yesterday in tier 3, in the weekly training, the responses that I've received from that, the excitedness. I mean, I could read as I was reading these messages, I could literally see the light bulbs going off in people's heads. And that makes me feel good. It makes me feel good to know I've helped somebody do something. It makes me feel good. And that's why I do it. I believe that we're all capable of leaving the world in a better place than when we got into it. No matter what our stage in life or what our position in the world may be, we're all able to do it, even on the smallest individual person-to-person thing. It's still, I believe, a positive to humanity. And so I do it. And I get a lot of great feeling out of doing it. So yeah, that's why I do it. I'm not going to lie. No reason to lie. Hey, I appreciate you, Clark, man. Thank you. Hank, you agree with me on altruism? For some reason, I believed that I thought you would agree with me on that. Paul, what's up? He says 100x in the 1 minute chart is where it's at in OTA. Oh my gosh. Casper says, I find that people put so much emphasis that somebody's a bad teacher when their counts are invalidated. Exactly. He says having your count validated or invalidated are equally beneficial and helpful, because either way it gives clarity as to what might be going on happening. And that's what it's all about, guys. But what you'll notice is as you become more progressive, in your education and trading, and as you become more experienced, you'll find this out. When you first come in as a new trader, you will think that, oh my God, they got the target wrong, or it's doing the wrong thing, so they're idiots, they're stupid, they're losers. But if you are able to stick it out and get to the point where you can stay in long enough that you really start understanding the market, you'll see it for what it is. Just what Casper said right there. There's it's all about, just getting a feeling for where price may be going. You're going to be wrong more than you're ever going to be right, guys. Not just in the markets, but in life. How do you deal with it? That's the question. How do you deal with it? If you start off with the understanding, the recognition that you're going to be wrong more than you're ever going to be right, excuse me, that allows you then to set up some protection against being wrong. And that's worth its weight in gold and more. Even if gold's going down to 900. But even if it doesn't, guys, it just means, okay, so we find out it's not. That's fine. So now we've got a more bullish count, and that affects the way we look at everything. That's worth it. That's worth it. But just because people have bigger ideas about things don't mean that they're waiting until that thing to happen, guys. These ideas I talk about, potentially Bitcoin going down below 3 or gold going down below 1,000, these things aren't things that happen overnight, guys. They aren't. They take a while to happen, if they do. And along the way, they can be invalidated. The question is, do you really understand that? Or are you just concentrating on, listen, that's their target, and they don't see anything else? If you're a real trader with experience and whatnot, you understand there's other possibilities out there. You would never guarantee something. I've never guaranteed any targets or anything, because I could always be wrong. So learn that risk management, guys. Not just in the markets, but in life. Learn how to manage your risk. If you can do that, it frees you up to be a lot happier in whatever it is that you're doing. It really does. Does BitConnect count as DeFi? Oh my gosh. Let me see here. What's going on, Kyle? Good to see you. Brian, of course, here as well. All right, guys. So I've got to get out of here. I'm over an hour. We usually just do this from 11 to 12. So I'm going to go ahead and get on out of here. Tomorrow is Friday, so we are going to have our all markets thing coming on there. So we're going to look at all the markets, stock market, Bitcoin, DXY, oil, natural gas, precious metals, all those kind of things that kind of give you a bigger idea of what's going on in the economy. So we'll take a look at that, and we'll see how it's going. We'll see how it's gone this week and what we may be looking at next week. Kind of get you guys a little bit of information there, get you set up maybe. I'm doing that. So same time, 11 a.m. Central Standard Time tomorrow. We'll do it till 1. Other than that, if you haven't done it yet, guys, I'm telling you, come on, join us over here, howtotradetowin.com. We'd absolutely love to have you there. BMA is just the Bitcoin stuff, but we got, updates throughout the day, and we've got some amazing traders that are pretty much minute to minute. I don't know how they spend so much time in the channels, but always information flowing there. We've got Tier 2, which includes that, and then you also have 15 plus daily and intraday updates across, precious metals, stock market, cryptocurrencies, forex. You have you have access to our educational library, and then of course you get to Tier 3, which has all of that. Excuse me. A few more intraday and daily updates, as well as, I think the big thing for Tier 3 then, you get your hot takes, which we put out on Sundays, Tuesdays, and Thursdays, which give you stocks, crypto, and Forex setups. And then you also get the weekly live training. And I think in and of itself, I honestly think, I sometimes hesitate to say stuff like this, but guys, just the feedback that I've gotten over the last 2 months we've been doing this, I think if you come in at that Tier 3 level and you don't learn at least one technique that can make you enough to pay for that level, I think you're really just not paying attention. And we do a new technique or two techniques, a couple of techniques every week. And these things are easily used by people that have no previous market experience, no previous trading experience. It's a way that newer traders can get into the market and find ways to trade profitably as they're learning about the market, as they're getting the rest of the market understanding in it. So, again, if you're a new trader and trying to figure out, man, I just don't know, how do I enter, how do I exit, what things should I be looking for? I mean, that Tier 3, what we do weekly, is where you should be. And again, if you guys join, you get access to all the previous 8 to 10 hours of weekly live educational stuff that we have there already, plus, of course, every week coming up. So I think it would behoove you to join us, but, if not, be sure you join tomorrow at 11 a.m. Central Standard Time. We'll see you here, all right? So that's it, guys. I'm going to get out of here. You guys have a great day. Trade safe. Remember, the only thing that you control in the markets is how much you lose. It's all about that risk management, right? All right, guys. Y'all take care. Thanks again. I will catch y'all later.